RJ Hottovy, who is joining us to talk some more about it. RJ, when we look at the report here, obviously we've got a pretty nice surprise to the bottom line that is helping the shares, but still some pretty big questions out there for what they do next. So tell me what's on your mind here.
Yeah, really, there's two things that came out of the quarter for me. One is I think eBay's understanding where they fit in today's modern e-commerce marketplace. They realize they're not going to beat Amazon in terms of growth. So what they're doing is trying to make it a better experience for both its buyers and its sellers. And we're starting to see early signs that things are paying off. They're getting into new categories like first-party advertising, which is where its sellers can advertise directly on the site and promote their listings better. Getting into payment intermediation, too. So I think they're building a more robust marketplace. But honestly, I think the shares are up on the acknowledgement that management's looking at potentially selling both its StubHub and classified business. I think there's some real value to be unlocked if they do that move. And I think that's what's driving it more than the earnings beat.
So, RJ, there's obviously a lot of questions now about the activist role here and what they do with StubHub specifically. Did you get clarity on that from the language?
No, I mean, they kind of punted on what they're going to do other than saying they're exploring strategic alternatives or reviewing where that fits in the portfolio. So I think that's going to be an ongoing process. But I do think if you look at what the activist shareholders, Elliott Management in particular, have outlined, right now the market seems to be applying just the lower multiple, kind of the overall eBay multiple to the StubHub and classified business. And to be honest, I think that's probably a little bit unfair. These are assets that could be exceptionally well run in the right hands, and I just think that they're not part of the core strategy for eBay longer term. Elliott's outlined a valuation of $3.5 to $4.5 billion for the StubHub business alone. I think if you take a look at that, and that sounds about right to us too. And I think if you do that, you unlock a couple dollars per share of value as well. So not really clarity what the next steps are with it, other than the company is reviewing where these fit in the portfolio. And I think even that is, showing that there's a renewed openness to potentially selling those businesses off over some period of time.
We always talk so much about Amazon as being the dominant player in e-commerce. I think many are surprised to see the chart of eBay and Amazon basically even over the past year. And I think eBay now, after today's move, has edged it out a little bit. Does that make sense to you, or is it just getting sort of a broader macro lift because the consumer remains strong? I mean, if something doesn't change and things slow down, do you want to be holding eBay shares over Amazon?
I still think Amazon's probably the better buy, and if you look at some of the things that are taking place there, they're coming off the heels of a very successful Prime Day. They're starting to drive a lot of new sellers to the platform, which I still think is the largest risk of the eBay story, is a lot of eBay sellers migrating to Amazon. But on top of that, too, you're starting to see a lot of new subscription services come out of Amazon, which I think are important for longer-term margins. It's doing a great job of its advertising business, which I think is an undiscovered gem, if you will, in the Amazon portfolio. So if I'm comparing the two, I still think Amazon's your better buy. We've got a $2,300 fair value estimate on that one. I think eBay's still got a lot. I still think if you're a holder, you keep on to it. And I think if you're looking for new money, you could do worse than eBay, too. I mean, I think with some of these other things, with a potential sale of StubHub and classifieds, and at least stabilizing the business, which I think is what's driven the market outperformance on the thing this year so far. I think the combination of those two factors, both names are worth holding. Amazon's a better buy, but certainly eBay has its catalyst as well.
Is eBay going to look more like Etsy as it goes on into the future? Because we've seen the way they've turned their business around. We see the demand for very custom-specific items and kind of collectible type of trade. Is there a place for eBay to move closer to that market as opposed to competing with Amazon?
Yeah, I think that's the right way to think about it. I mean, I don't think it's going to be, with its product mix, I don't think it can completely replicate the Etsy model. But yeah, Etsy's been one of the success stories in the e-commerce market this year. And I think that eBay would be smart to replicate a lot of the things that they've done. If you can't beat Amazon on complete price or logistics, you have to differentiate yourself. And I think going to more customizable, more unique products, which management called out as a major initiative for this company. I think that's the right idea. It's just going to take time, and we're starting to see early fruits of that, but I think that's what you're going to have to, what we're going to see from eBay in the future is more of a Etsy-like model, more of a consumer-to-consumer marketplace, and I think there is a place for eBay in the broader e-commerce landscape using that kind of model.
Lastly, RJ, before we let you go, does yesterday's report change anything about your rating or the price target that you see this company going to?
Yeah, I'd probably bump up my fair value by a couple dollars just based on the margin expansion. They've done a good job keeping sales and marketing costs, well contained and focused on higher ROI marketing. So I might bump up my $36 fair value estimate by a little bit, while also acknowledging there might be a couple dollars of extra value if they do pursue a sale sub-public classified. So, name that from a standalone basis looks fairly valued, but it does have a couple potential catalysts in the works as well.
All right, RJ, appreciate a great update for us here. Now we're going to check out the trade element on the company. RJ Hottovy joining us from Morningstar. He's a consumer equity analyst covering restaurants, retail, e-commerce.